Hi, I'm Steve Bowden. I'm one of the startup advisors at Newcastle University. The startup team is here to help all Newcastle University students and recent graduates who want to work for themselves. So whether you have an innovative new idea which you want to develop into a business and create a company, or you might have skills and knowledge that you want to share as a sole trader, a so-called freelancer or independent professional, or you might want to do a combination of these things and have a hybrid of employment and self-employment with a portfolio career. Whatever option you're considering, we are the team who are here to help. In this video, we're going to look at self-assessment, what it means, how to do it, and your obligations when it comes to reporting how much money you've made from self-employment. In simple terms, self-assessment is a way of reporting your income and paying tax to Her Majesty's Revenue and Customs, often referred to by the abbreviation HMRC. This is the entity who are responsible for collecting taxes on behalf of the government. If you're employed, your income tax is usually automatically deducted from your wages by your employer, and you'll see that on your wage slip. However, if you're self-employed, you'll need to pay your taxes yourself by completing a self-assessment tax return. We have a separate video with advice on choosing the right legal structure for your business, which will help you decide whether registering self-employed is right for you. And there's a link for that in the description below. However, should you choose to register self-employed, then there are some basics about self-assessment that we're going to cover in this video. Okay, so the first thing that I'm going to say, which is important to stress and often misunderstood, is that you only get taxed on your profits. As a sole trader, you get taxed on your profits, you don't get taxed on everything you earn. We cover examples of the different types of tax, including income tax and national insurance contributions, in our Understanding Taxes video, and there's a link for that in the description below. But for the moment, it's important to understand that the purpose of your self-assessment tax return is to inform HMRC about how much income you've made from self-employment and what expenses you incurred in the course of that self-employment in order to calculate what your profit was so that they in turn can calculate how much tax you owe on that profit. As you'll see from the Understanding Taxes video, there's also portions of your profit which are tax-free and thresholds that you have to pass in order to pay income tax or national insurance contributions in the first place. So it's important to understand how you will be taxed and what you will be taxed on. But rest assured, the headache of working out all of that is done when you submit your self-assessment tax return online. So, if you're telling HMRC about how much income you've made and any expenses that you've incurred, then you're going to have to keep records. Keeping records doesn't have to be complicated. You're simply making a record of any money coming into your business as payment for work you've done or products you've sold, and any expenses, any money that's gone out related to delivering that work. So all you're doing is keeping a list of transactions. You can use bank statements to help you do this, or better still, every time you make a sale, keep a copy of the invoice you've sent to your customer. Put as much information as possible on your invoice so you can capture the detail of that job, but at the very least include the date you are issuing the invoice, the person or the company you're doing the work for, and a basic description of the work and the amount payable. And for expenses, keep receipts of any supplies you buy or any expenditure which can be classified as business expenses. HMRC have a useful resource on their website which will help you understand exactly what is claimable as an expense. Some of them will already be obvious to you. If you're a freelance artist, for example, and you've been commissioned to produce some work, then the money you receive for that work will be classified as income, as sales. And any materials that you've bought in order to produce the work would then be an expense. So sales minus expenses equals profit. There are also things like rent and travel and other direct and indirect expenses, which will be related to your business, which you might want to claim depending on the type of work you're doing. So keep records so that when you come to do your self-assessment tax return, you can enter the total amount of your income and the total amount of your expenses on that tax return. You don't have to detail all of your income and expenses, but you are required to keep a record of your income and expenditures for at least 6 years. That means, should you be randomly selected for a tax inspection, then you will have all the records to demonstrate how much you made, the type of work you've been doing, and for who. You're not obliged to have a separate bank account for your business, but it is easier to keep a record when your business expenses are separate from your personal ones. Keeping records can be as simple as a few columns and rows on a spreadsheet, but there are also a host of online accounting apps out there which make the relatively simple task of keeping records even simpler. Self-assessment is a way of reporting your income and expenses in order to understand how much tax you owe. So now let's look at when you have to deliver your tax return and pay any taxes that you might owe. The first thing to say is that the tax year runs from April to April. It begins on the 6th of April each year and ends on the 5th of April of the following year. So when you submit your tax return, you are informing HMRC about your income and expenditure between those 2 dates. At the time of recording this video, we are in the 2021-2022 tax year. That means the tax year began on the 6th of April 2021 and it'll end on the 5th of April 2022. If you started trading, in other words making sales and incurring expenses, any time between those 2 dates, then your first tax year is the 2021-2022 tax year. That means that you have until January 2023, which is 9 months after the end of the tax year, to submit your tax return and pay any tax you owe. The deadline for delivering your self-assessment tax return is midnight on the 31st of January. That's one of the reasons it's so important to keep records of income and expenditure. If you wait until the deadline, then you are potentially reporting on work you did and expenses you incurred up to 21 months ago. So don't leave it until the last minute to submit your tax return, and don't miss the deadline or else you'll incur an automatic penalty of £100 and further penalties for the longer you take to submit your return. Hopefully this has helped demystify and clarify what self-assessment is and your obligations are. Check out our Understanding Taxes video for more information about taxation and for examples of the types of tax you will incur when you're running your own business or if you're doing a combination of employment and self-employment. If you have any further queries or you have a business idea that you'd like to discuss with a member of the startup team, then don't hesitate to contact us. You can get in touch with us and you can find out information about all of our support, services and resources on the Career Service website or on Facebook, Instagram and Twitter, or you can contact us via the My Career portal. We look forward to hearing from you and helping you get started.